today's video, we'll delve into 3 compelling AI stocks you should consider investing in besides Nvidia. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. There's no denying that technology titan Nvidia has been many investors' favorite way of plugging into the artificial intelligence AI craze over the past 18 months, and rightfully so. Its processors form the backbone of most AI platforms. However, as is so often the case, time and reality are catching up with Nvidia. Competitors are diligently working to close the market share gap, and because it's already so big, Nvidia's accelerated growth pace is set to slow. Its shares are also very expensive as measured by some metrics, a premium that has some investors questioning how much further it can go near term. Translation: it may be time to start shopping around for other ways to invest in the next stage of the AI revolution. Here are 3 other AI stocks to consider instead of, or at least in addition to, Nvidia. First up, let's talk about Palantir Technologies, ticker PLTR. If your experience with and awareness of AI is limited to user-friendly chat platforms like OpenAI's ChatGPT, Alphabet's Google Gemini, or Microsoft's Copilot, you probably agree they're clever applications. But generative AI doesn't exactly seem like technology that should be the basis for an entire industry. However, these AI-powered chatbots are far from the only way to commercialize artificial intelligence solutions. Far more marketable to industry and institutions are AI platforms built from the ground up to help them sift through mountains of digital data to make better informed decisions. Enter Palantir Technologies, a standalone AI software company dedicated to AI-driven decision-making solutions. It's becoming a major player in this young industry. Last year, Palantir did $2.2 billion worth of business and turned a little over $200 million of that into net income. The company's software helps organizations to integrate and analyze their data, leading to more efficient and informed decision-making processes. This has a wide range of applications, from government and defense to healthcare and finance. One of Palantir's strengths is its deep integration with clients, often working directly with them to tailor solutions to their specific needs. This high-touch approach can create strong customer loyalty and recurring revenue. For example, Palantir's Gotham platform is widely used by government agencies for intelligence and defense purposes, providing real-time data analysis that is crucial for national security. On the other hand, its Foundry platform caters to commercial clients, enabling them to manage and analyze their data more effectively. However, it's worth noting that Palantir's heavy reliance on government contracts could be seen as a risk if there were significant changes in government spending priorities. Moreover, while Palantir has shown consistent revenue growth, the company's path to profitability has been a point of contention among investors. Despite turning a profit last year, Palantir is still investing heavily in R&D and expanding its market presence, which may impact short-term financial performance. What do you think about Palantir's potential? Do you see it continuing to dominate the AI-driven decision-making market, or do you think its reliance on government contracts poses too much of a risk? Let us know in the comments below. Next, let's dive into IonQ, ticker IonQ. Silicon-based binary code computing has been around for decades now, and has evolved as tasks have become more complex. We're reaching a point, however, where commonplace computing hardware can no longer handle the sort of software experts are able to conceptualize and then create. Quantum computers that utilize subatomic particles rather than silicon to interpret and calculate digital information are the new frontier of computing. To the extent this comparison will have any meaning, quantum computers can be on the order of thousands, if not millions, of times faster than traditional computers, depending on the task they're performing. This, of course, has enormous implications for AI. IonQ is one of a handful of companies developing such computing platforms. It's already developed and commercialized them. Now it's just improving them. Its IonQ Tempo platform in development right now will utilize an integrated 64 superconducting qubit chip versus the IonQ Harmony, unveiled back in 2020, that only employed 11 such quantum particles in each chip. The company already boasts plenty of paying customers and developmental partners ranging from Lockheed Martin to Microsoft to Airbus, to the Oak Ridge National Laboratory, just to name a few. Last quarter's top-line revenue of only $7.6 million is still 77% better than the year-earlier quarterly comparison, with the company largely being held back by a lack of capacity to build more systems and offer more services. It's coming, however, in response to demand. Precedence Research predicts the quantum computing market will expand at a compound annual growth rate of 37% through 2030. Quantum computing is still a relatively young science, and its landscape landscape could change quite a bit in the near and distant future. For instance, quantum error correction, which is essential for reliable quantum computing, is still an area of active research and development. IonQ's approach to using trapped ions for quantum computing is one of several competing technologies, and it's uncertain which method will ultimately prove to be the most effective and scalable. However, the prospective reward measures up to this risk. The current consensus price target for IonQ stands at $14.98, which is 85% above the stock's present price. If IonQ can continue to advance its technology and scale up its production capabilities, it could capture a significant share of the burgeoning quantum computing market. Moreover, as industries such as pharmaceuticals, materials science, and finance begin to adopt quantum computing for tasks that are currently intractable for classical computers, IonQ's market opportunity could expand exponentially. Last but not least, add Apple, ticker AAPL, to your list of artificial intelligence stocks other than Nvidia to buy. It's a suggestion that might surprise some investors. While it's the United States' most profitable publicly traded company for good reason, it's not exactly been seen as a major AI player. That's about to change, though. At February's shareholder meeting, CEO Tim Cook made a point of highlighting that every Mac that is powered by Apple's silicon is an extraordinarily capable AI machine. In fact, there's no better computer for AI on the market today. Cook also emphasized Apple's work in generative AI and told the world to look for new AI functionalities from its tech later this year. What that meant wasn't entirely clear at the time, though details are slowly coming to light. In May, for instance, reports surfaced that the company was working on its own AI data center processors, rather than relying on third-party chips like those made by Nvidia. Then, at its annual developers conference, the company announced that OpenAI's ChatGPT would soon be able to be integrated with Apple's newer devices. Perhaps most notably, Cook explained that Apple wouldn't be collecting or storing any personal data from the usage of its new AI offerings. At first glance, investors weren't exactly stoked. They were expecting a little more, or at least expecting a little more detail about these and future AI-powered features. But 24 hours later, the stock was trading up 6% on the news. Don't be like those initial stock traders and underestimate the potential of what Apple just unveiled. This may be exactly what a bunch of Apple's die-hard fans were waiting on before upgrading their iPhones. As such, don't be surprised to see sales of the breadwinning device finally perk up again. This may also only be a glimpse of Apple's bigger AI ambitions. Apple's strategy involves integrating AI capabilities seamlessly into its ecosystem of products and services, enhancing user experience without compromising privacy. For example, the AI-powered features in iOS, such as improved Siri functionality, on-device processing for privacy, and advanced image recognition in the Photos app, showcase Apple's commitment to AI innovation. Additionally, Apple's significant investments in custom silicon, like the M1 and M2 chips, enable the company to optimize hardware and software together for superior AI performance. Furthermore, Apple's focus on user privacy and security sets it apart from many other tech giants. By processing data on-device rather than in the cloud, Apple can offer powerful AI functionalities while minimizing the risk of data breaches. This approach not only enhances user trust, but also complies with increasingly stringent data protection regulations worldwide. Now let's engage in the comments section. We'd love to hear your thoughts on the stock market. What are your predictions for the next big AI stock? How do you think quantum computing will impact the tech industry? Do you see Apple becoming a major player in AI? Share your thoughts and let's have a discussion. Before we wrap up, let's take a closer look at some key metrics for these AI stocks. Palantir, with a current price of $25.82 and a market cap of $57 billion, shows a solid performance with an impressive gross margin of 81.16%. This indicates strong profitability from its AI-driven decision-making solutions. IonQ, priced at $7.21 with a market cap of $2 billion, stands out in the emerging quantum computing sector. Despite being a younger company with a gross margin of 9.13%, its potential for growth is significant, especially with predictions of the quantum computing market expanding at a compound annual growth rate of 37% through 2030. Apple, a tech giant with a current price of $214.29 and a staggering market cap of $3.29 billion, boasts a gross margin of 45.59%. Known for its innovative integration of AI across its product ecosystem, Apple continues to leverage its massive resources and market influence to push the boundaries of AI technology. Each of these companies offers unique opportunities and risks, reflecting their different stages and strategies in the AI landscape. If you have any thoughts on these figures or how they might impact your investment choices, Share them in the comments below. In conclusion, while Nvidia remains a significant player in the AI space, it's worth considering other options like Palantir Technologies, IonQ, and Apple for their unique positions and growth potentials within the industry. Each of these companies offers distinct advantages and opportunities, whether through specialized AI solutions, groundbreaking quantum computing technology, or integrating AI with consumer technology products. Remember, investing in stocks always carries risk, and it's crucial to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, please like and subscribe to our channel for more valuable insights. And always keep in mind that this video is for informational purposes only and does not constitute financial advice. Before we wrap up, we'd love to know, which AI stock are you most excited about and why? Do you think AI will revolutionize any other industries in the near future? Let's continue this conversation in the comments below. Thank you for watching Simple Investing Secrets, and we look forward to helping you achieve financial freedom through smart investing.